Hey guys, in today's video, I want to talk about a conversation I've had with a couple customers recently. And I say customers, potential customers, people that I am talking to about building a home, so they would fall into the prospective customer category, who are making a decision or trying to make the decision about whether they should wait to build because they think interest rates are too high. So I have had this conversation with people before, many a time. I wasn't having it back in 2021 when rates were in the 2s or the 3s, but as we all know now, and I'm making this video in late August of 2025, rates really for this whole year have been relatively high compared to what we had experienced a while back. So I did a video on this a while back, and I don't want to constantly repeat myself with these, but because this just kind of transpired recently, it kind of inspired me to do another video on it. A while back, let's go back a few years to the COVID era. We had incredible interest rates. You know, when COVID hit, actually even coming out of the Great Recession, interest rates stayed relatively low. Then COVID happened and rates dropped down to levels we had really never seen before. I'm 31 years in this industry, and I had customers getting rates in the 2s. I'd never seen anything like that, and I don't think there ever had been anything like that. So that's awesome for those people that got that, and it stayed that way for a while. You know, and after some point, things just become the new normal. So these incredibly low interest rates, which were really artificially low, became the new normal. Then things started to turn. You know, we started to have inflation, all these things that came along with the conditions that happened with COVID and everything else after, and rates had to start going up. The Fed had to start raising rates to cool off inflation. And so mortgage rates to buy houses had gone up significantly. Talking about a time period when they were actually around 3%, some people getting in the 2s. Now I would say as of today, rates are probably about 6.5%. That sounds like a huge increase, and it is when you're talking about mortgages. You know, if you have borrowed $300,000 or $700,000 or $1 million or more, that makes a huge difference on your payment, 3-4 points on the interest rate. That being said, and I've said this in a different video, when I came into the industry, rates were 8%, and they bounced around 7 to 8 for a long time when I came in let's say 94. If I were to take an average, rates have probably averaged, and I looked this up a while back, about 5.5, almost 6%. So we're in a range right now that's a little higher than we want it to be. It's not incredibly high. Right before I got into the business, they had rates in the teens. And so hopefully we'll never see that again. That being said, it's a completely fair point to say, hey, I want to wait to build this house, this beautiful custom home I'm going to do, until rates go down. Because, hey, if those rates go down 2 points, that saves me a lot of money, you know, on my monthly payment. If I'm borrowing whatever I'm borrowing, especially the more you borrow, the more money that adds up to. Fair point, and I understand the concept. I'm not going to say don't do that. What I will say is there are conditions that people don't think about when making this choice. And I did mention this to one of the people that I'm working with right now, which is fair enough. I understand the concept of waiting. There is some talk that rates will be coming down. The problem is, after over 30 years in this industry, I've learned nobody knows, right? We don't know what's going to happen tomorrow in the world, in the economy. Nobody thought COVID was going to happen in a worldwide pandemic. So these kind of things do happen, and they affect the economy and interest rates. So we don't know. We hope that rates will eventually be coming down. The problem is, how long do you have to wait? If we knew rates were coming down next month or the month after, we'd go, okay, no problem. Table this until we see those rates come down, and then we pull the trigger. The problem is we don't know what that time frame will be. Will that be a year? Will that be 6 months? Will it be 2 years? The downside of waiting primarily is inflation is still happening. So I've had this conversation with people before and said, I get waiting, but keep in mind a year from now, your house is not going to be less expensive to build. Your loan interest may be less, and that can be very helpful. On the flip side, though, inflation is continually happening, hopefully at a normal inflation rate, which might be 2 to 3% a year, but we've certainly seen a lot higher over the last few years. And so what we can guarantee is that a year from now, 2 years from now, the sticks and bricks, the labor and materials are going to be higher, especially when you are in a growing area like the Dallas-Fort Worth and Texas area, where just a lot of people moving here. High demand means pricing is going to stay high. So it's something you have to think about. Now, as a builder, I also don't know a year from now or 2 years from now what the costs are going to be. They're going to be higher than they are today. I can guarantee you that. How much higher, I don't know. And that is the challenge of all of this strategy, the waiting strategy. I do tell a lot of people, look, if you really break it down, building as soon as you can is usually the best choice because you are beating any inflation. As it is, building a home has a long, what I call gestation period. I mean, you're maybe finding the land, then you're working on plans. That can take a while. There's so many processes, so many moving parts that it can take a long time just to go from the time you say you're going to do this till you finally have a floor plan and a builder. That can burn 3 months, 6 months, 9 months. I've had people come to me, they've been working on this for a year or more. And so there's a lot of time that can be used up just on the front end. Then of course there is the building of the home. The kind of homes we build, generally I'm telling people you figure for the average one, 10 to 12 months. And we've done a few that take almost 2 years. So none of us know what's going to happen in that time period, but the faster you can get on the case, the better off you'll be where inflation is concerned. So what are the benefits of waiting and what are the potential penalties of waiting? The benefit of waiting for interest rates to come down is just simply you do get a big interest rate drop. Hey, we're going to wait and watch, and sure enough, 6 months from now, rates come down a point, 2 points. That can make a big difference on your mortgage payment, and odds are offsets any normal inflation that you would see on labor and materials. What is the penalty for waiting? Again, the inflation. Maybe 6 months from now, a year from now, rates haven't dropped, but inflation's gone up. The home actually costs more to build. And you're sitting around going, okay, we waited another year, rates haven't come down, and now it's just more expensive to build a house. So that's the penalty to it. There's another thing to consider when you're thinking about waiting, and it goes back to the fact that inflation is permanent, right? A year from now, when materials and labor have gone up on, let's say, this house right here, a year from now, this house I'm standing in will cost more to build than it does today. And that's what I think of as a permanent condition. Inflation's going to go up, it's not going to come down. So, how does that compare to interest rates and getting a loan? Well, what I will tell people is the flexibility of mortgages is that you can refinance. You can't fix the fact that this house will be more expensive a year from now than it is today, but what you can do is get your loan to build the house you want, and then if a year from now or 2 years from now you see a significant drop in interest rates, you can refinance. So you actually do have some flexibility. Sure, refinancing costs you a little money. You're going to pay for that, I guess, benefit or ability to do that, but it can save you a lot of money. I knew a lot of people when the rates started dropping like crazy during COVID that just went back and refinanced. And so maybe they had rates that were at 6 or 7%, but now rates were down to 4 or 3, maybe in the 2s. They went back and refinanced. So you have that flexibility when it comes to loans and interest rates that you don't have with inflation. Again, inflation permanent, interest rates not necessarily permanent. So I hope this video has been helpful for some of you out there. As a builder, obviously I'm going to say, sure, you should build first, never wait. Not true though. I have actually told people, especially back when we were having all the inflation with COVID and everything, you might want to wait for a bit because some of what we were seeing was very abnormal and we knew was not going to stay the way it is. But in these fairly, what I would call stabilized times, I'm not sure about the waiting game, primarily because I already thought rates would have dropped a long time ago, and that didn't happen. So we don't really know what's going to happen with the interest rates. Meanwhile, materials and labor are always going to get more expensive. So I guess my take would be you're probably better off starting something now and then refinancing your loan later when interest rates drop. But if you're somebody who decides you want to hold off, or you need to hold off because the rate increase happened, I knew some people that were looking to build homes back when rates were still low. And the rate increase along with the inflation has kind of scuttled a lot of people's plans. So you may be somebody that needs things to be to a certain point before you can pull the trigger, and I understand. So I hope this video was helpful. I'll see you guys in the next one.